Hello Africa, welcome to Investments for Impact, a Villgro Africa podcast. In this season, we're focused on the topic of fundraising. Welcome to our second episode on raising from family and friends. Thank you for joining us. Joram, welcome to Villgro Africa. Would you please introduce yourself and talk a bit about what you do and specifically talk about Sandbox?
Okay. So first, thank you. Thanks for inviting me to be part of this. As I think you're aware, I'm a good friend of Villgro. We have done quite a bit together.
From the early days.
Yes, from the early days.
Yeah.
So my name is Joram Mwinamo. I am the co-founder and CEO of Sandbox, which is written out as SNDBX. So at Sandbox, we've today managed to aggregate about 35 non-competing professional services under one roof.
Wow.
And we do that, in a sense, just to become like that one-stop shop business accelerator, because we know that small and growing businesses or startups struggle to find appropriate professional services to get started with their businesses, and largely because of the whole concept of cost and, finding someone who actually understands, legal for startups, marketing for startups, or small and growing businesses. And so when we brought these professionals together, it was basically to address that challenge of helping entrepreneurs in general to walk to one location, find all the services they need that can help them to structure and grow their businesses. And so we've been doing that for the last 3 years. Before that, I was running a strategy consultancy called Wild International, which is part of the Sandbox today. It's one of the 35. But now I'm fully at the Sandbox and trying to make that work. Yeah.
Wonderful.
Yeah.
Joram, one of the claims that Sandbox makes of itself is that it's the only business of its kind globally.
Globally, yes.
Yeah,
and I, until today, I actually challenge people and I'm like, I'll give you $100 if you send me a link of a company that does what we do. Like, go and look for one and bring it. And to date, nobody has done so.
Wow.
So I think my claim is, and I've done this all over the world, so I think my claim is actually true.
Yeah.
I think we've seen different versions of similar things, but they're usually a lot smaller. Like they would have 6, 7, maybe 8 of professional services under one roof. We have 35. They're all entrepreneurs. And they're all under one roof. They actually operate from one location, and then we get them to integrate and collaborate. So, and I have requests from more than 20 countries.
Wow.
That set up franchises, licenses of the same model.
Wow.
So, including the US and the UK.
Congratulations.
So, yes.
Wow. Okay.
Yeah.
Great. Before we get started, one of the things that I find very interesting about you is that you always wear African shirts.
Yes. Yes, part of the brand essence of Sandbox. We call ourselves the village formula. And one of the things that we were keen on right from the beginning is that we were very passionate about our African heritage and just drawing a lot from principles or ideas or how things happened in traditional African society that we thought worked very well. And one of the big concepts around that was that in our traditional African societies, it took a village to raise a child. And what that meant was that everyone was equally responsible for that child, whether they were the direct parents or not. And so we took that similar concept to it takes a village to raise a business, where all of us as the 35 experts take equal responsibility around, helping our clients to grow. And so they have, this village that works together. And then we've just realized down the line that the whole concept of collaboration, working together, everyone actually ends up being a lot better off than if you try and do things alone. So, so that village concept and our African heritage is embedded in everything we do, and hence the African shirts. If you come to the Sandbox, you'll realize all the decor is actually quite modern, but very African.
Yes, I've seen that.
We hope to keep that. Yeah.
Wonderful. Thank you. So our topic today is friends and family fundraising. And just to give you a bit of background of why we thought this would be a great topic to discuss is because we hear a lot about friends and family in training. If you go to many schools, they'll say that one of the sources of early stage funding, pre-seed, seed, would be friends and family. But we don't hear too much about it in practice.
Yes.
And having been here at Villgro, I haven't really come across a lot of people who actually report that they were funded through friends and family. So we thought today we would unpack that topic and with the idea of exploring if it's, a potential source of funding for much needed capital for startups in Africa. And to start us off, I would just like you to tell us, because you're an entrepreneur yourself.
Yes.
How did you finance your first business?
So my first business was Wild International, and started out when I was very young, together with my co-founder. And I think right from the beginning, we did it from our savings of our side hustle. It was a side hustle because we were employed. So then eventually we both quit our jobs and started to run the business full time. And I do remember that right at the initial stages, there was things we would do where we would occasionally say need to finance. We've gotten a contract, but we're going to get paid afterwards. And so beforehand, we would need some money to deliver the contract. And then once we got paid by the client, we would be able to return that money. And right at the beginning, I remember it was my co-founder's sister, Evelyn, God bless her soul, who used to work at the UN. I think she still does, and would always have some extra money. And so she's a person who would run to finance. Like I remember one time we had gotten a contract, but they asked us to give the ETR receipt. And that's the first time we had heard about the word ETR. So we went trying to find out what's this thing all about. And then we found out that it was quite expensive. And so, of course, we ran to our financier, who then was able to, advance us. We were able to do the job, deliver it. When we got paid, we were able to pay back the money. And I think that happened maybe 2 or 3 times after that. And so that, I would say, was probably our version of the debt funding we had at that point. But to a large extent, I think a lot of people actually access family and friends' money, but maybe they just consciously don't realize, because for some people it will be the spouse who may borrow some money or get some money from savings and put into the business. Others, it may be a father or an uncle, or other people, it may be a group of friends who have put together some money. And I've had of quite a number around myself who come into an investment group, and maybe they put some money together over a series of months, and then it gets to a point they have a substantial amount. And then they start to look for investment opportunities. And so quite a number of people access these kinds of monies. I think it's just that in this country, maybe this continent, the whole concept of family and friends fundraising is not recognized as a formal thing. In many cases, people end up not structuring it formally either. Like, there are no agreements around it. There's no exchange of equity or shares around it. Sometimes it may be given as a loan, but forgiven down the line if they're unable to pay, because it's a daddy-daughter situation, and how are you gonna take your daughter to court if she does not pay back money? So there's all sorts of like emotional attachments around it, and so that's why maybe people do not think about it as an official channel of fundraising, and that maybe we're also not equipped. I remember a Norwegian friend of mine, when they were doing their family and friends raising round, they actually shared like would you call it a prospectus or something?
Yes.
They sent it on email to very many people, myself included. I was very surprised by their openness at that point, because they were like, this is how our business is doing. We are looking for X amount of money. And, if you're willing to be part of it, if you give us any of this amount, you'll end up owning, this number of shares. And they did raise some money, but it's the first time I'd seen somebody do that. And so at that point is when I probably realized, for us as Kenyans, we are not exposed to that as an option, and so we don't take it as an option, or we don't take it seriously. But in my opinion, it happens quite a bit. I have quite a number of clients who I know began with family and friends' money.
Wonderful.
Yeah.
This is exactly what I wanted us to talk about today, because we hear about large companies that started off with friends and family round. There's Amazon, big as it is. There's Walmart. There's GoPro.
Yes.
There are such examples out there. So it leaves us wondering, is it that we don't have friends and family fundraising, or is it that the stories are not being told?
Yeah, I think we're just bad storytellers through and through.
Yes.
One of the things I try and encourage my clients to do is really to tell their stories, because in the absence of that storytelling, you find there's a lot of misunderstanding around how these businesses grew in the first place.
Yes.
But if people came out and told their stories, then it might be a bit less mysterious how businesses came to be. I think I was mentioning earlier, people may not know this, but I think Cellulant's initial investor was actually family.
Wow.
And then they were able to rope in more institutional investors down the line, but I think the person who wrote the first check was actually Ken Njoroge's father-in-law.
Wow.
And maybe you can invite him here to come and tell the story.
Yes.
But I'm aware of it. I have another client, Parapet Group, that I know the initial investors in the business, and they remain investors to date, were actually Alex's father and his friends, who put together some money and put into the business, bought initial equipment and got that up and running. And I could go on and on and on. If you look at Wild International's portfolio of clients, a lot of those were initially actually bankrolled or got some kind of financing or loan or equity, where family put together money, and they've grown to significant businesses down the line. But like I said, the stories are not being told. I wish a lot more of these founders would just be open about how they initially began. Family friends fundraising doesn't always go very well. And maybe I cannot mention some of those examples, but I do know that quite a number of businesses that either it's an investment group of friends, put together some money and advance them that and acquired some shares in the business initially. Sometimes, the deal goes bad and then the business doesn't work out, and so it can get quite sticky at that point, because there's both emotional relationships and there's supposed to be a professional relationship there to support the business to grow. But I would say every time I've kept hearing the myth that the only companies that raise money are foreign-owned companies. I don't agree with it, because I think there's a lot of family, friends rounds that happen locally. The stories are just not told, and in many cases, maybe it's not recorded officially. And so as the success happens down the line, the role of that initial family and friends money is not recognized, and sometimes also comes in kind. Sometimes you find people donate equipment, donate infrastructure assets to a business, allow somebody to come and live rent free in your office for a whole, that's a form of investment, because you'd have been paying that somewhere
it's else. Even a gift.
Yes. so there is a lot of support that usually comes from the immediate family. Spouses, I think, are completely overlooked, and many of them do contribute maybe money, maybe
blood, sweat, and tears.
They're able to borrow money on behalf of their spouse to put in the business, because they are credit worthy, because they're employed, and you find that the business grows and then they are able to repay through that channel. So there's many forms of that happen, but I don't think they're recognized officially.
Wow. Thank you. I wonder, could it be that part of the reason why these stories are not being told is because they might give the impression of the entrepreneur that they were born with a silver spoon or
Yes,
something like
yes.
that. Do you suspect that has something to do with it?
I think it's cultural, and I think this is global, where
Yeah.
there is always the perspective of how stories are told about how entrepreneurs build their businesses is always from a heroic point of view, that this person was very smart, he came up with this brilliant idea, a spark in their head. And so that heroic culture of telling stories tends to make people downplay aspects of the story that would make them look less glamorous, or even look privileged. Occasionally hear stories of famous Pan-African or global entrepreneurs from Africa, and very conveniently the stories are left out of how their parents were also wealthy, and that's where they probably got the initial capital to start, or their parents were powerful or connected to leaders in their country, and that's where they were able to get some deals earlier on that just got them going, which I think does a huge disservice, especially to our young generations, because I think it would be amazing if people just understood first the options that they have. If a lot more people told the stories of how they raised from family and friends, it may open up the eyes of young entrepreneurs to realize that you can actually structure a proposal to your family and ask for money, or structure a proposal to your friends around you who are part of an investment group, and they can advance money to your business, but also maybe help those entrepreneurs be a lot more serious about what it is that they're building, focus a lot more on the value they're creating, because they know this that they've borrowed is going to go back, or I suppose has an expectation to be repaid. And so we just need to tell a lot more of the stories from a black and white point of view, and cut to the chase, so that people actually understand how resourceful they can be starting from right where they are, and how that can propel them. And just the way you've talked about the global studies, it can also maybe help a lot of businesses weather the storms at the beginning, because you find that because capital is very scarce here, a lot of people at the beginning either have to do a job alongside building the business, or take up consulting assignments alongside building the business. So the business ends up taking a lot longer to grow, rather than access the capital right from the beginning, and be able to scale faster down the line.
Wow, thanks. Now, maybe we could get into the practicals, So you've given us lots of examples of businesses that were funded in this way. So I'm curious to find out, what would you say are the practical methods? Is there science to it? How was it done? So maybe speak to us a bit about the how.
So I think even when I started to learn about fundraising is when I began to be exposed to things like a business can be valued, and that you can put in place a business plan that projects how the business is going to make money. Of course, everything that happens at the beginning is an assumption and some kind of educated guesses about what is likely to happen down the line. But just going through that process of building a business plan and projections around how you think the business is going to grow enables you to interrogate also what you're doing as an entrepreneur, and whether your assumptions are correct, whether the things that you're building into your business plan will help your business to grow. Out of projections, there are different methodologies that can be used to value the business, to say that, okay, you're right at the beginning and maybe making very little revenue or none, but we can see the potential of his business is going to be X maybe in 5 years or 3 years or that kind of thing, and therefore the value of the business, we can estimate it to be at I don't know, $100,000, $500,000. There are different ways in which you can do that. And so I guess the practicalities around it, and I don't think that happens today. I think in many cases people just go and present a proposal and say, look, I need $1 million shillings to start, I need to buy some stock, I need to invest in equipment, I need to do this, and somebody will give them, and then probably people come up with an arbitrary figure of how many shares are being acquired if it's equity investment. And so you may get $1 million shillings and give out 10% of your business or 50% of your business. Again, the ignorance at the beginning, people make a lot of mistakes.
Yeah.
And so, they go by educated guesses of what both the investor and themselves are determined to be the value of the business. But just to do it a bit more scientifically would be to put in place a business plan, do some kind of projections around how you expect the business would go if it got a certain type of capital, and then based on what you're projecting, you can do a very educated guess on what the valuation is. There's what the numbers say in the paper, but even beyond that, whatever it is that you end up getting for valuation would be a negotiation between yourself and the people that are investing. And so it may be one individual, maybe an investment group, maybe so you'd sit down with them and say, look, this is what we're expecting to do. So I'll come and say, maybe my business is valued at $500,000. And then the investor will say, no, look at this, there are these risks. We are doing this. You're hardly making any revenue. So I'm going to value you at 300,000 or 250,000. So for the money I give you, I will get this kind of shares. So at the end of the day, it will always be a negotiation. Mm-hmm. Then a lot of people say, once your first investor has invested at a certain valuation, now you have proven valuation at least what somebody is perceiving your business to be worth. Mm-hmm. And so you can take that as the official valuation going on and, negotiate with it. And so if you're a very good negotiator and you get away with a lot, then you would say that, you by the time you get to your second, third investor, you at least have a precedence to go with about the value that people think your business is all about. Good thing about this entire process that it's kind of the hard questions people ask you before they invest as you pitch also help you interrogate your business. I think people just look at the fundraising, the value of fundraising at closing the round and saying, this is the amount of money that we've been able to raise. I think there's a lot more value in the entire process because you're kind of always pitching to people asking you hard questions about where are you going to make this money from, what are you planning with this and that and the other. And that prodding can, in a sense, and depending on, how business savvy the people you're asking are, it can help build a lot of value or help you think through your model quite a bit and keep panel beating stuff as you go along. And I think it can add a lot of value to the business even before the money comes in.
Yeah. Definitely. Thanks for that. It makes a lot of sense. The earlier investors help you to answer questions for the later investors. And just to recap, so you're saying, number one, have a business plan. Number two, have projections. Number three, get some sort of valuation.
Yes.
And that will be based on the projections, even if you don't have revenues. And once you have your first check cut, then you have validation on that valuation. And you can now proceed and snowball to get other investors. Now, if we could look at that question from the investor point of view, do you have any ideas on how friends and family can be professionalized? And I'm particularly thinking in this case about risk. How do you manage risk? Especially when thinking about families, there's the potential of relationships going wrong. On the one hand, there's also that perception that you're my family member, this is a gift or a sort of entitlement.
Yes.
So how can we manage those risks so that we can sort of crowd in more resources? Yeah.
I think maybe one aspect is just trying to professionalize the entire process so that it's a bit more formalized, where even as you make requests, you're making it on the basis of like maybe you've built some kind of, out of your business plan, you have a bit of a pitch deck or a prospectus where you're not pitching with entitlement, but you're pitching because you believe your idea is good and you're putting in everything possible to make that idea work. If you have some traction, you're putting the numbers there, you're being transparent, you're putting in place the right structures and processes, maybe governance. In many cases, people will invest because they can see you have some type of governance in place. You've put a board of advisors or a board of directors or something of a sort. And so I think it's not taking the process for granted and thinking that just because these are family and friends, I can take advantage of the entire process. I would say pitch to them the same way you'd pitch to a venture capitalist investor or private equity investor or, a professional angel investor. Make the process as professional as possible. Do the paperwork around it as well. And which then means, if possible, try and get some advice from somebody who may understand that process of fundraising and valuation. Try and get some kind of advisor who can help you professionalize the process. And if an investor comes back with an offer, try and get, again, a professional, either lawyer or the chartered financial analyst. I think usually the profession that's around this whole business valuation and stuff. Try and get an opinion as to whether the term sheets you're getting or the offers in terms of agreement are solid, because a lot of people have also made mistakes there, because there's friends and family who may be sharks. They may be able to see through the idea and see that they can buy for a bargain because you're ignorant about the entire process of fundraising. And so they may give you a little money and then get a big stake of the business, where they definitely end up undervaluing you. And so the more you professionalize the entire process, the more likely it is that you're going to end up with a good deal out of the money that you raise. Second, because it's professional and that returns are expected, that probably also pushes you to put a lot of effort into making sure the business works, and that you run it professionally as well. And again, to just not take it for granted. And when it grows and actually, makes the returns, then by all means, make sure the people who took a risk on you at the beginning end up profiting, because they are taking the highest amount of risk. Probably the idea is not proven. And so, they are the ones that, should be rewarded. And should you down the line get institutional investors larger, then keep it in mind to ensure those who took the risk at the beginning also get to benefit from that risk that they took. Yeah.
Very interesting. Now, I like what you said about the things that we know to be true for traditional venture fundraising can also work with friends and family, just that it is a different source of funding. Now, moving on, I wonder what your perspective would be, especially as an African, on the potential of this as an avenue for unlocking more funding into early stage businesses. And part of the reason I asked that question is because we've been seeing growth in the angel investing space, and we are seeing the growth of the angel investing networks, but that's still quite formal and out of reach for many entrepreneurs. Then on the other hand, you have Africans in diaspora sending money for things to be done for them, houses to be built, which are never built, and that sort of thing. What do you think is the potential for us as Africans to explore?
First, I think there's a lot of capital, and this particular group of family and friends could be the ones to actually unlock quite a number of businesses that could end up growing and scaling significantly. We are a market where capital is generally constrained. You're not going to get money from the bank for sure.
Yes.
You can be guaranteed of that as a startup. They don't understand it. They would never take a risk on that. Institutional investors in Africa tend to view risk a bit more, I think they judge startups here a bit harsher than they would in other markets. I've been fundraising myself and done it through different sources and rounds, and there's just a sense in which I would say, in fact, probably Kenyans are the most harshest judge of your valuation. Then second, I would say is Europeans, and then Americans are probably the ones who are quite used to risk and losing money. And so you'd find that their perception of risk is a lot, and failure is very different from the rest of the world. They take a lot of risks, and I think it's already embedded into their culture and even their financials. They know that out of 10, they'll get 1 big win and 9 will fail. So they're fine with it. But in other parts of the world, people are a lot more touchy about the money they put into businesses. And so I think that our culture probably needs to change to unlock the value that can be created at that startup level. I think if we are able to unlock a lot more family and friends money going into businesses, but professional businesses, like I said, it would just give, I think, a lot more founders the ability to take more risk at the beginning, probably be able to focus fully on what they need to do as a startup, be able to access assets or equipment that they need to make their startup to work. I think would probably increase the rate of survival and success. And depending on the kind of businesses that get invested in, I'm always like, I don't know if there's anything that stops businesses that we start from here growing and scaling and indefinitely, maybe to the whole of Africa and sometimes to the rest of the world. And that can unlock quite a bit of wealth for the investors, for the entrepreneurs themselves, for the country. And so maybe we need to educate people a lot more on how they can do this, and maybe share even a lot more case studies of businesses that started from nil and based on family and friends ended up raising second, third rounds of money and then grew into large businesses. I also say from a cultural standpoint, a lot of us are first-time entrepreneurs. And so our families don't understand investing. A lot of people within families are employed, and so they may be hard pressed to see how their hard-earned savings could be put into a business for it to grow and scale, yet they have no frame of reference of what entrepreneurship is and how successful this might or might not be. So it would require a big culture change for that to happen. But I do think that if people are educated, if they maybe even just take courses on understanding what to look out for when investing. I know people like Victoria Ventures, Nairobi Business Angels Network have been doing courses for people just to understand how they can invest, and then getting them to put in a little bit of money, maybe $2,000, and they must invest it that year. So it forces people to start on a small scale to invest, and there's a lot you learn from that. Even I have invested, by the way, in smaller businesses with mixed outcomes, but when you get to practically do it, there's a lot you learn just about that investment process, what kind of entrepreneurs you can take a bet on and what kind you cannot. So I would say from a cultural standpoint, I think would create a lot more successful businesses if we just changed our mindset around how we perceive risk and failure and that kind of stuff.
Okay. Just picking up on something you said, you talked about the North American culture, for instance, being comfortable with the idea of losing money.
Yes.
Which I think is a big obstacle here.
Yeah.
Yet we hear stories every day in the news about schemes of all sorts.
Yes.
Pyramid schemes.
Exactly.
And housing development schemes. So investment is inherently risky.
Yes.
So how do we flip this and get people to be comfortable with risk? Any ideas on how we can do that?
I think just first as a culture is just to get away from this thing of greed and wanting to make a killing, without putting anything down. And educating ourselves. There is risk everywhere. There is risk in money markets. There is risk in the stock exchange. There is risk in even right now, you can see we're having a national conversation around risk in government bonds, and there's a risk of default.
Yes.
Yet we thought these are like foolproof, bulletproof investments, but risk exists everywhere. And I think one of the things that it reduces risk is just educating yourself better on what processes you can use around investment. So the more you learn, if you want to know how to make money in the stock market, there are people always making money there. It's just to understand more how the stock market is played. And so if you want to understand how to make money from funding startups, then it's just to understand how money is made there. And I think globally there have been statistics that, it's usually 1 out of every 10 that succeed. I think I've had statistics even of the best angel and venture capital investors, and the success rate usually comes from the 1 or 2, bets you take that end up becoming really big, and they then end up making up for all the money you've lost in all the other investments that you made. And I think then people end up forming some kind of philosophy around what kind of industries they think they understand better, what kind of entrepreneurs they can invest in terms of things to look out for. So you could start out with a rate where the losses are high, but over time you form some kind of philosophy over time over what to invest in, and then maybe your success rate gets better down the line. And then the returns that come from the bets that end up winning become very, very good. So it's also to move away from the same mentality of greed investing, but just knowing that this year, get rich quick. This is going to be something that will take long. It will be a long-term thing. There'll be learning, there'll be failure, there'll be some successes. Then eventually we'll improve how to do it. Yeah.
Very interesting. So in the US, 35 to 40% of all early stage businesses raised from family and friends. And that's a huge contribution to the economy, to getting, as I said, their businesses as big as Amazon that got friends and family funding. So I'm curious to hear your thoughts, other than what we've already talked about, which is you have to wet your feet, learn and wet your feet.
Yes.
There's no shortcut.
Yes.
What kind of shifts do you think would be necessary for us as a continent, perhaps even in terms of policy, and also from an ecosystem level, that can help us to move on to that next step?
Yeah. I think maybe right off the top, we have a disproportionate focus on bank financing as a country, and I think there's many alternative forms of financing. I think even as you mentioned, in many other jurisdictions, bank financing maybe comes in when businesses have become stable and are growing. And so maybe that's one of the places where this could be a shift, where hired professionals, investment groups, we have a culture of what we call chamas here, which are like investment groups or savings and credit cooperatives. If we get more and more people understanding that it's not just about property, because I think that's where majority of our investments go to, and if we keep at that, we'll probably create an oversupply in that space at some point. So if we were to have more people getting educated around startups being an avenue that creates a lot of value, I think even that's been the case, where you'd find even the insurance industry, like apparently there's a lot of money that's set aside that now can go into venture funding, but doesn't, because people are still very conservative around putting money into startups. So I think it's just demystifying that and probably showing examples of leading lights that have started from scratch in terms of local companies. In this country, there's a lot of fintechs that have started local, probably operating on a Pan-African scale. I think I've seen studies around retail companies as well, tech-enabled retail companies. An ignored part of this country is that our biotech space is actually quite good, but we don't put any money into it because we do quite very good research, but that research gets stuck in a shelf somewhere or a journal and doesn't end up in commercialization. So there's a lot of opportunity, in my opinion, to create a lot of value from businesses, but we have tended to view startups as very risky. Maybe a lot of the stories we've heard about businesses, we hear more stories of failure than we hear of success. Again, those who are successful don't tell their stories to just show how they started from zero and gradually grew over time. Maybe were able to access investments down the line, and then they became a very large business. I think there's quite a number. I've been coming across them of Asian-owned second, third generation businesses that have gone through that path of starting with a small shop, and then eventually, they're able to grow into a maybe retail chain, and eventually they open up to venture capital investors, and now you find they're operating in several countries as large businesses. So just, I think, building that entrepreneurial culture and government beginning to look at it seriously as something that can be incentivized. Maybe there can be guarantee funds around family and friends fundraising, just to encourage people to take a risk on that front. Policies to encourage some kind of structuring and regulation of investment at that level, or de-risking as well. There's quite a number of countries where you find there's government funds that can go towards de-risking investments made by family and friends, and encouraging more people to do that. And so it's just, I've always said, because I've been an entrepreneur for a long time, that in this country, entrepreneurship is actually not talked about as an option right from the beginning. It's something that happens to the misfits, the rebels, and but it's something that could be encouraged more directly. You could have national, county governments just building very specific policies. There's a startup bill being discussed right now, but it could be encouraged towards unlocking the funds that are going into property, so that some of them can begin to go into businesses. We've been having discussions even of late with the Nairobi Stock Exchange, and that maybe there could be more things simplified there to encourage even private investments to happen through the mechanisms there, so that it's more transparent and it's more structured. And so I think we are still, the investment landscape has matured quite a bit, but I think we still have very rudimentary structures around it, and people are not very educated around what the potential is. So we can do a lot more. I'm glad this podcast is there, because I think it's one of the avenues you'll find people learning. And then I guess as more people come out telling their stories, we can encourage a lot more people to head in that direction.
Wonderful. Just before we close, does this sound like a cause that Sandbox would like to pick up?
I think definitely, because we deal with hundreds of businesses on a day-to-day. In all that, we're able to see a lot of different things. We're able to see very committed, relentless, focused entrepreneurs who are very keen on just building and growing their businesses and looking for every mechanism possible to help them to do that. And always in this case, we're like, we have very hardworking people, whether the economy is doing well, badly, whether we have an election, whether we have a pandemic. There are people waking up every single day to go and continue building their businesses. And so generally, I think that it's a very, very, very tough business environment. And so when you find people succeeding, you can tell the kind of resilience that has gone into making that success happen, the kind of ingenuity, the kind of resourcefulness. And so we can only support for that to happen more. In my opinion, I think there's a lot of things from a policy standpoint that can be done to just make it a bit easier for people to build and grow businesses. But back to the ecosystem, it's something we're already doing. We talk to a lot of different groupings of people who are looking to invest, looking to get educated in how they can invest, looking to learn more in how they can do this. And so I do think it's a cause that ourselves together with other people in the ecosystem can join hands. We've been putting our hands together with a few organizations here in Nairobi just to talk about how can we educate people more on how they can do the angel investing and venture capital and understand that better. But maybe we need to start that conversation from how can family and friends, maybe we need to hold sessions that educate families
Yes, definitely.
and your regular friends on how they can invest, so that maybe they can look for a business near them of a friend that's running a business, and just offer, to make some investments, but also be equipped with the professional tools required for them to make a good investment.
Wonderful.
Yeah.
So we need professional businesses and professional
Educated
investors.
investors. Yeah.
Thank you very much, Joram. I really appreciate your time and your great insights from your wealth of experience. I think let's keep this conversation going.
Yes, definitely.
I think it's a start. We'll see where it leads.
Yeah.
Thank you.
And thank you for doing this as well. Yeah.
Asante sana.